How should I invest $100,000 in cash? Most people would be happy to have the following problem. You find that you have an extra $100,000 in cash, and you don't know what to do with it. The key word in this case is discretionary. We're going to assume that your extra $100,000 is really extra, and that you don't owe any money, especially on high-interest credit cards. Most people who work in finance would say that if you owe money, you should use that chunk of money to pay down your debt first. Once that's done, you're already ahead of the game if you have some other assets in place, like a good retirement plan, an emergency fund, and other well-placed capital. If so, you probably already know some of the things you can do, but if you have never invested before, you might want to start by doing some study. There isn't a single best way to spend this money, since there are many choices. Your goal is to pick the right investment vehicle or mix of investment vehicles. Here are some of the best things you can do with your extra cash. Here are the key takeaways. If you have extra cash, take care of the basics first, pay off your debt, start or keep funding a retirement plan, and save some money in case of a disaster. If your money comes from a savings account like an IRA, you might be able to roll it over tax-free into another approved account. Stocks, bonds, mutual funds, and certificates of deposit are all good ways to invest money. Real estate can be a good choice, with the possibility of making a lot of money. Certificates of deposit and high-yield savings accounts are good choices for people who don't want to take risks. Due to inflation, interest rates on savings accounts and certificates of deposit are better than they have been in years. By the end of 2022, rates for savings accounts and short-term certificates of deposit will be above 3%. Compare prices to find the best deal. Real estate. Even though it might not be the most exciting thing to do, if you have a debt, you might want to pay it off. If you don't already own your home or another property to use as an investment, you might want to think about buying some. Real estate can be a good place to put your money, but it comes with risks and you need to do your research. Investing in real estate the old way. When most people think about dealing in real estate, they think about buying a property and selling it quickly, or buying a property to rent out to make money. Whether gains are made quickly, over a long time, or not at all depends on a number of things. First, it's all about the place. One of the most important things that determines the worth of a property is where it is. To get the most for your money, it's just as important to choose the right place as it is to choose the right home. The state of the market may be the best way to tell if buying in standard real estate is a good idea. If prices are fluctuating a lot, it might be best to wait for them to level out. When you buy real estate, you have to spend a lot of money. Before buying, a person should think about their return on investment, ROI, how profitable the property is, and the costs involved. Think about how much of your $100,000 will be used to buy the property, fix it up, make improvements, and sell it. For flips, you should think about the cost of selling. When renting, you need to think about how much it costs to keep up. One of the few things that tend to get more valuable over time is real estate. Because of this, some investors keep their homes until the value goes up enough to make the return they want. Real Estate Investment Fund, REIT. A real estate investment trust could be a good choice if you want to invest in real estate but don't want to deal with the hassle of buying property directly. Investing is easy, and you don't need a lot of money to do it. Some sites for investing let you put in as little as $100. REITs don't buy and sell properties like traditional real estate purchases do. Instead, the properties in their portfolios bring in money. They include places to shop, places to get medical care, places to live, and business sites like office buildings. You can buy REIT stock from a trader or from the company itself. REITs pay dividends to their owners, which are taxed like normal income. Gains, on the other hand, are taxed as capital gains, taxable investments. You can spend your extra cash in ways that will cost you money. That is, your wages or gains from selling something will be taxed. Stocks, bonds, mutual funds, and exchange-traded funds, ETFs, are some of the most popular types of investments that are taxed. Some of these tools, like stocks that pay dividends, could bring in regular money. This strategy is more appealing because of the way taxes are set up. In general, capital gains are treated better than earned income and regular interest income.
Hello, Kazillionaires. Do you enjoy this video so far? If so, don't forget to click the like button. Subscribe and click the notification button if you want more daily updates on building wealth, personal finance, and achieving financial independence. Now back to the video.
Investments with low risk. If you don't feel comfortable buying in the stock market and want to keep your money safe, you can buy high-yielding certificates of deposit or put it in a high-interest savings account. Your capital is even protected by the federal government if the bank is a member of the FDIC, which is almost every bank. Don't just stop by the bank office near you. Find the best bank rates by shopping around. Online sites of well-known financial services companies like Goldman Sachs, American Express, and Barclays Bank may offer the best rates for high-yield savings accounts. Online, you can also find out-of-state banks with good deals. Accounts for retirement. If your retirement plan is an individual retirement account, IRA, or 401(k), which are both tax-deductible but not tax-free, you might want to start a Roth IRA. With a Roth account, you pay the income tax due in the year you put the money in, but when you take the money out, you don't have to pay any more taxes on the capital or investment gains. Changing an IRA to a Roth IRA is a taxable event, and the amount of the change is taxed as regular income. Earnings in a Roth account can grow tax-free, and there is no minimum payout needed by the IRS, so money can keep building up even after retirement. In contrast to standard IRAs, there is no age limit on who can join a Roth IRA. The IRS limits how much you can put into a Roth each year, so you couldn't spend the whole $100,000 unless you were moving it from a qualified retirement account. In 2022, the most you can put in is $6,000 or $7,000 if you are 50 or older. In 2023, the most you can put in is $6,500 or $7,500 if you are 50 or older. Also, the adjusted gross income, AGI, of the individual can't be more than the maximum. Married couples reporting equally and widows or widowers who make more than $214,000, which will rise to $228,000 in 2023, cannot make a contribution. Diversify, diversify, diversify. Your $100,000 is a good amount of money, so you can follow the first rule of investing. Spread your money around. In other words, you should split up the $100,000 and put some of it in things you already own, like your IRA, and use the rest to try out some new investment tools. When deciding how to spend this kind of extra money, you should carefully weigh your options. Think about your short-term and long-term financial goals, and be honest about how much risk you are willing to take. Before spending, it's always a good idea to talk to someone who knows about money. Helpful hints. There are many ways to spend $100,000, such as putting together and handling a collection of investments. If you are a smart investor, you might be able to choose your stocks, bonds, and other investments on your own. If you are new to investing, it makes sense to get help from a licensed financial advisor. These experts come up with ways to spend your money that will help you reach your financial goals. In addition to giving advice, they can also take care of how and where your money is invested. Knowing how your money will be treated is important if you want to keep it safe and decide where to put it, since different investments lead to different tax situations. If you don't have to pay taxes on your $100,000, you should think about options that will help you save on taxes. If the $100,000 came from an approved retirement account, you might want to think about rollover or transfer choices that put off paying taxes and give you features that fit your financial goals. How can I invest $100,000 to make money while I'm not working? You could put your $100,000 into real estate, stocks, REITs, real estate investment companies, or other products. Do your study and talk to a professional, like a broker or investment advisor, to help you choose the investment that will bring in the money you want. How can I use $100,000 to make $1 million? It is possible to make $1 million from a purchase of $100,000, but it is likely to take a long time. Some trades have made huge amounts of money very quickly, but they are very risky. Financial experts can help you figure out what fits your wants and goals best. What are good ways to invest $100,000 in real estate? One popular way to invest in real estate is to flip it, which means to buy a property, fix it up, and then sell it for a profit. Investors in real estate can also rent out the property to make money every month while the value of the property goes up. But buying real estate costs a lot of money. Another choice is to invest in a real estate investment trust, REIT, which invests in income-producing real estate and needs less money. In conclusion, you want to spend $100,000 but don't know where to start. The first thing you should do is study your choices so you can make an informed choice. Do your research so that your money goes where you want it to. Finding the right business can be just as satisfying as making money from it.
Thanks for watching. Don't forget to click the like button. Subscribe and click the notification button if you want more daily updates on building wealth, personal finance, and achieving financial independence. And remember, the world is yours.